Good afternoon. You're tuned into Mid-Cap Radar. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me, as always, is Vivek Iyer. Well, a day after the budget, and we have seen some fall across the board, coming in across the asset classes as well. The Nifty did recover from the lows, but struggling to go above that 24,900 mark for now. The mid-caps, though, are struggling, and the advanced decline ratio absolutely in favor of declines as we speak, Vivek.
Good afternoon, Sonal. You're absolutely right. Came in with weak cues, a very weak handover from yesterday's budget session. Commodities, like you mentioned, under significant pressure and a very volatile trading session. While the Nifty has managed to see a bit of a comeback, it's the mid-cap and the small-cap index that continue to sulk quite significantly in the session today. But a lot lined up on the show, so let's start off with the top headlines. Stocks trade extremely volatile, with mid-caps bearing the brunt, reflecting in high declines to advances ratio. PSU banks, healthcare and IT are the big drags, with energy being a rare gainer.
Stocks like E2E Networks, Lodha Developers and Anantraj are rallying as Budget 2026 offers a tax holiday date 2047 for foreign cloud firms using Indian data centers, boosting long-term sector prospects.
Shares of IOCL, BPCL and HPCL trade higher in trade as no excise duty hike on petrol and diesel provides the relief for oil marketing companies.
NBFC stocks lower as higher market borrowing announced in the budget may keep bond yields at elevated levels, posing risks to net interest margin expansion. PNB Housing, Shriram Finance, LIC Housing trade with cuts.
Metal stocks continue to trade under pressure, mirroring the weakness in the global commodity market. SAIL, Jindal Stainless, Vedanta extend losses.
Okay, all right, those are the top headlines that we are tracking, and some of them we'll discuss in greater detail, but it's a power-packed show. A lot of weakness that we are seeing in the mid-cap index, so let's do one thing. Let's talk about a special segment, mid-cap movers, and we have Gaurav with us to take us through that. But before we do that, let's take a look at specific stocks, because there's been big cuts in the broader markets. For instance, Bharat Dynamics, that stock is down 8.5% as we speak. Sterlite Technologies is down 7%. You have Hoodco, the stock is down 7%. Welspun Specialty is the other one which is sitting with cuts. Grow, so because of that STT hike that has come by, a lot of these stocks, capital market stocks, are in focus. But we had conversations with a lot of these analysts who track the stock, and they have been of the opinion that maybe not so much of an impact immediately. Incrementally, maybe you could see some impact on their profits. But yes, it continues to be very volatile across sectors as well now.
That's right. Absolutely. Especially when you look at BSE, it's seen a bit of a recovery from yesterday's very sharp sell-off. In fact, even a name like an MCX, Angel One, Nuvama Wealth, most of these names have actually seen a bit of a recovery. Well, before we hop across to Gaurav, one particular stock that we'd like to highlight is Powergrid. The company, after a while, has raised the capex as well as capitalization guidance for FY26. But Gaurav is ready. He's standing by the wall. He's taking us through all of the mid-caps that are moving around in the session today.
Well, if you look at the market, yesterday we saw broader market was under pressure, and today if you look at the Nifty mid-cap index, it is still under pressure. In fact, even if you look at Nifty, it has gained, but Nifty mid-cap index is under pressure. But even with that pressure, we are seeing some kind of gainers in that market. In the likes of D-Link, Latent View, Atul Auto and Lodha Developers, if you look at these stocks, they are not only gaining, but we are also seeing some volumes which are actually increasing in the stock. But on the losing side, we have a whole host of stocks. First, let's talk about some of the stocks which are not only losing, but they are seeing heavy volumes as well, in the likes of Onward Tech, Northern Arc, Intellect Design. Even if you look at Bharat Dynamic as we speak, Bharat Dynamic is also under immense pressure. Other than that, we are also seeing some pressure in the financial segment. Specifically, if you look at some of the names like Hoodco, 5-Star, Ujjivan Small Finance Bank, Jana Small Finance Bank, LIC Housing, all of these stocks are under pressure. And the two reasons, first is that yesterday we saw there was a number which was actually expected to go up in terms of the yields, and this is because of the bond yields which are likely to go up. It is something which is hurting the stocks right now, and they are seeing some pressure in the financials. Lastly, if you look at the stock which are reacting before its earning, we've got PB Fintech, City Union Bank, Tata Chemical, all of these stocks are currently under pressure, but let's not forget that these stocks will also come up with the numbers. So it is important to see how the numbers come, if there is any positive surprise in the numbers for these stocks. Lastly, let's also not forget, if you look at the 52-week gainers today, we do not have any 52-week gainers specifically in the mid-cap movers. But if you look at the 52-week losers, we have some stocks in the likes of Exide Industries, SBI Cards, which is again under pressure, IRCTC, NTPC Green. All of these stocks are currently have reached 52-week lows in the day today. So definitely let's watch out of these stocks and let's see if there is any mid-cap recovery sign in a day today.
Okay, take that point. Some mid-cap movers which are on our radar. Thank you, Gaurav, for joining us with that list. Let's now get some corporate conversation going. Rajesh Agrawal, MD Insecticides India, is joining us now to discuss the quarter gone by and, most importantly, the outlook going forward. Mr. Agrawal, thank you so much for joining in. This time around, revenue growth has been weak again. It has come in at 8% versus quarter one growth of 5%, quarter two growth of 2%. You had guided for a 10% growth for FY26 overall. Considering that it has been high single digits so far, do you think you will meet that 10% guidance or do you have a revised guidance for us?
This is a difficult year. We thought that there were some recovery signs, so that will be possible. But overall, it looks that getting the recovery during this year is going to be very, very difficult. So despite of our best efforts, we could grow our sales only by 8% in this quarter. And overall, if we see, it is just the 5% growth what we have achieved in the 9 months. So I believe that achieving the 10% target in this fiscal is going to be very, very difficult. And this year will close somewhere around 5-6% growth only.
Okay, so Mr. Agarwal, you're saying that at the end of FY26, you're toning down or moderating your top line guidance from 10% to around 5%. Now, when you're talking about the premium product segment, earlier you had given a guidance of 20%. So what will that grow at, given the fact that you moderated your guidance, and how will margins look at the end of the year?
Yes, correctly pointed out that these premium products have also taken a hit. The growth, overall growth for the premium products will also remain somewhere around 10%. And the margins might also not improve too much because we are into a cyclic business where 60% business or 65% business happens in H1 and it is only remaining 35 to 40% which happens in H2. Though we'll try to make a recovery in the last quarter, but meeting out all the expenses and doing the things are looking little difficult in the volatile market. So that does not mean that the outlook overall is going to change for this year, 26. Yes, this quarter 4 is not a very huge recovery quarter, but we'll try to maintain the top line and we are working on the bottom line that how we can sell the premium products better and make some gain into this.
Okay. Mr. Agrawal, when the entire sector was going through a lot of pressure, you were one of the companies that spoke about continuous growth. So I want to understand what is happening in this space right now. Are you facing pricing pressure? Is it demand pressure? Generally there's a lot of dumping happening from global markets. I want to understand what went wrong suddenly.
Overall, this year has not been a very good year for sales because demand pressure is very much there. And there had been seasonal impacts continuously during the cycle because in the beginning of the Kharif season, there were good rains and then there was a big drought spell. After that, there were big flood-like symptoms and even the Rabi season did not pick up. So overall, the industry this year is expected to decline by 2 to 3%. And in that scenario, we are going to grow by 5%. We have beaten the industry, but we are also beaten by our own targets. So that way, I'm not very happy. And particularly the margin side also has taken a hit, which is forcing us to rethink how we have to make up the thing, how we have to increase the ROC, how we have to reduce the expenses, how we have to see that where we are going wrong. So we are working out and I believe that from Q1 itself, we will find a change in our performance.
Okay. Mr. Agarwal, two-part question. End of the year, where will you end EBITDA margins at? I just missed that number. And secondly, off a low base, FY27, what is the kind of initial estimates you can give, especially given the fact that weather conditions are expected to be a lot more supportive?
H1 had seen the EBITDA margin going to 35-36%. Difficult to maintain that. So there will be a little slide, but still the total EBITDA margin, what we are going to get is near double digit. That is something I can hope for the year as a whole.
Okay. Take that point, Mr. Agrawal. Thank you so much for joining in and being honest about the outlook going forward. So they will not be able to meet the guidance that they had given earlier of 10%. Now they have cut it down to 5 to 6%. There is some demand pressure and it is expected to continue for a bit. The stock has come off from the high of the day, but of course it was already trading in the red. We'll slip into a short break. On the other side, we'll decode the impact of STT hike in the F&O segment on arbitrage funds. We'll have Bhavesh Jain of Edelweiss MF who will join in to explain the impact.
Welcome back to Mid-Cap Radar. Well, one particular stock that we alluded to very briefly at the start of the show was Power Grid. Power Grid, even as we speak, is holding its analyst meet post its Q3 results. A couple of important points from the presentation as well as the call that is going on. We spoke to a couple of analysts, so the management has gone ahead and raised both the capex as well as the capitalization guidance. This is something that is seen quite positively, especially when you're looking at a utility name. The capex that the company earlier had guided to was close to 28,000 crore. The company is hopeful of achieving a 32,000 crore capex for FY26. Capitalization earlier guidance was close to 20,000 crore. The company already has done close to 18,700 crore by the end of Jan. So in the next 2 months that are pending for FY26, they are expecting to go ahead and beat that guidance. On the back of that very positive commentary, Power Grid, after a while, don't remember the last time seeing a utility company higher by almost 5.5%, and positive commentary coming in on right-of-way issues, positive for the entire renewable energy universe as well.
Take that point and higher by 6% in a market like this. So that stock needs to be discussed. That's about Power Grid. But let's talk about some more budget amendments that came by this time around and get in Bhavesh Jain, co-head of Factor Investing of Edelweiss MF. Now remember, there's been a hike in security transaction tax on F&O trades. So while we have spoken about stock-specific issue and how it would impact some of the companies, let's understand how it would impact one category of funds, which is arbitrage funds. They do have trades in F&O because they try to make profit from the differential in pricing in the cash and the futures market. Bhavesh, thank you so much for joining in today. If you can explain to our viewers, if they're investing in arbitrage funds, what is the current yield that they are earning and how that return would be impacted once the STT hike kicks in?
Yeah. So hi, good afternoon. Thank you for this opportunity. So right now you will see for arbitrage fund, for whatever trades we do, almost out of the 100 rupees we have in AUM, 70 to 75% is in arbitrage position. Now this position gets rolled over every month. Earlier the cost of STT was around 2 basis point, and now that has gone to 5 basis point after yesterday's changes. Though it is effective from 1st of April, but just to give an hint, the cost will be up by 3 basis point, roughly 70% of our portfolio. So 2 basis point per month. So effectively the annualized impact will be around 24 basis point for rollovers. Plus we also do some fresh deployment, some churn which happens during the month. That will have an additional cost of around 6 to 7 basis point. So broadly the impact should be around 30 to 32 basis point. But it is like normally you will see whenever the cost of raw material increases, we pass on some of this cost. So similarly, the STT cost has increased for us. So we will also try to pass on some of this cost. When I say pass on this cost, we will increase our demand for rollover. So normally, if I'm rolling over my stock at say 50 basis point, now we'll ask a 51 or 52 basis point, so that at least a partial, you can say, impact of this STT hike is taken care of. But all said and done, as of now, on a steady state basis, we feel there will be an impact of almost 25 to 30 basis point on return of arbitrage fund. So normally, if you will compare return of arbitrage fund with liquid fund, say assuming both of them are giving you 7% return, earlier the benefit of you can say arbitrage fund over an liquid fund post tax was almost 120 basis point. Now 30 basis point out of that will go away, assuming we are not able to, you can say, improve our return to that extent. So now that gap between liquid fund and arbitrage fund on a post tax basis will be 90 basis point. So still, it is a better opportunity compared to a liquid fund on a post-tax basis. So we don't see a meaningful impact on the flows of the category. But yes, incremental returns are getting impacted, and we have to just, so at least for next 90 days, nothing is changing because we have already rolled over our position to February. February to March and March to April rollover will also happen before 1st of April. So no impact till April of this year. But after that, once we start rollover from April to May, we will definitely see some impact of these changes on overall return of arbitrage fund. And
Right.
this is not only limited to arbitrage fund, it will have some impact on balance advantage fund, some impact on equity saving fund, some impact on our SIF, which is Saltiva Hybrid Long Short Fund. Though the impact will be much smaller in this fund, but yes, the cost will have some impact on all these hybrid products.
Right. Bhavesh, thank you for explaining that very clearly for us. Well, a couple of quick pointers. So you said that a certain portion of the increase you will be able to pass on. So a certain portion you may be able to absorb, and you've given us a reason, or you've given us a quantification of how much that could be. The other question is, a couple of traders that we spoke to actually mentioned that there could be an offset in terms of using options instead of derivatives. Now, for an arbitrage fund, does that option exit, or will you have to go ahead and continue working in the same way, in the derivatives or in the futures market?
Yep. So for arbitrage fund, so all the arbitrage fund under the mutual fund space, there is no alternative to trade single stock future. We cannot trade derivative options in arbitrage fund. So that's why that option is not available to arbitrage fund. But yes, for, as I said, some of other hybrid funds like Saltiva Hybrid Long Short Fund or maybe Balance Advantage Fund, we can use some options and try to, you can say, in a way, reduce our impact. But anyways, over there, the impact was much, much smaller compared to what it is on arbitrage fund.
Take that point. So the short point is the impact could be anywhere between 0.3 to 0.5%, going by the exposure you have to futures position in a fund. But as you said, Bhavesh, it will not see a big impact. Still 90 days to go for this applicability to come by for arbitrage funds in particular. So we'll watch out for what kind of pass on some of these AMCs take when it comes to these hybrid funds. Thank you so much for joining today and explaining to us with example what this would mean for investors in hybrid funds. With that, we'll slip into a short break. When we come back, we'll get you more on the markets and stock-specific action on the other side. Stay tuned for that. Welcome back. There's a massive recovery which is underway. The markets are at the day's high. Nifty is above the 24,900 mark by a comfortable margin, actually. Even if we talk about the mid caps, they are down just 100 points as we speak. So there's been some buying from the lows of the day, and markets at the day's high as we speak. The stocks which are leading to this, we do have a lot of recovery coming in banking names and also metal names, select metal names, which are leading the recovery in the market from the lows of the day. So watch out for the Nifty Metals Index, Nifty Banking Index, because these two also are at the day's high. Look at that, the metals recovery. And this was one index which was seeing such sharp sell-off last week, especially on Friday.
That's right. The metal pack recovering, and like you mentioned, the banking pack. And within the banking pack, PSU banks have seen a very sharp recovery. But with that, it's all the time we have on this edition of Mid Cap Radar. Your stocks when we return.